Hey everybody, Glenn Tompkins here from our YouTube channel. Today we have another how-to video in our how-to series called How to Find the Best Growth Stocks. Today I've got 5 growth stocks for you. They will be EVC, SB, ERF, RRD, and AMPY. So that's the what. If you want to know what the why is all about, you sit right there. Hey everybody, Glenn Tompkins, Senior Instructor here at VectorVest. Today, another video in our how-to series. And again, it's all about taking you back to the fundamentals of investing to grow your portfolio. So, if you're brand new to the channel and you just stopped by, don't forget to hit the subscribe button, hit the bell icon so that you'll be updated when new videos like this come out. And if you like the content, by all means, please hit that like button. Help us to grow our channel and get these videos out to everybody else out there. All right, so when we talk about growth stocks, a growth stock is a stock that's looked at to go up, not only go up, but outperform the market over the next 1 to 3 years. The VectorVest system has an indicator called RV, or relative value, that will plot out the potentiality of that stock outperforming the market and by what percentage over the next 1 to 3 years. So these are stocks that go up. These are stocks that should outperform the market. And you got to understand, you're willing to give up a little risk for these stocks to go up as well. All right, so no news today. We're going to go straight into the software. From the software, where did I get my stocks? I used the power of the VectorVest system to hone in on the stocks that I was looking for. So I wanted the stock's price to be greater than $1, to be above a 250-day moving average of volume. I need liquidity, especially if I'm looking for stocks to grow. I have that relative value indicator, which is cast on a scale between 0 and 2, to be above the value of 1. Any stock that's got a relative value above 1 should outperform a AAA corporate bond. That's what we're using to gauge the market over the next 1 to 3 years. I want the earnings growth rate to be in double-digit figures. What makes a stock interesting? What intrigues people about a stock? What drives a stock's price higher? Earnings. I not only want earnings, I want the earnings to be growing, and I want them to be growing at a rate of double digits. And I want for a lot of the people who are on YouTube may not have a lot of money in the market, but I want to find the stocks that are also less than $10. Now, the sort is what makes a search in the VectorVest system. Relative value times CI. CI is our comfort index, the stock's ability to withstand long or lengthy price declines. How powerful is that to find a stock that should outperform the market and that goes up more than goes down? Put that together, that makes for a positive, really good search. So for everybody out there who is a VectorVest subscriber, here are the characteristics that I used to find the stocks. And if you're looking for stocks that are more expensive, change the price to greater than whatever amount of money you're willing to spend on a stock. But again, for a lot of people on YouTube, not everybody's got a lot of money. I'm trying to take that into consideration. All right, so now let's get into my listing of stocks. I'll go to the Viewers tab. Here's my 5 stocks. So the market is up today, down today, up today. All of the stocks from a growth perspective are all up nicely today. ERF is the only stock that's not above 1%, but all the other stocks are. So from a fundamental standpoint, this is a good play because these stocks are already doing what I want them to do, which is go up in price as a growth stock. You'll notice that we assign a value to every stock in our database. It's an intrinsic value of where we think the stock or what the stock is currently worth. Notice that every one of these stocks is undervalued. That is another great thing from a growth perspective, not only to have stocks that have a high probability of outperforming the market, but that are also undervalued. They've got some move to reach up to value. That's number 2. So let's go to RV. RV, again, is that relative value indicator cast on a scale of 0 to 2. Above 1, favorable, below 1, unfavorable. The higher above 1 it is, the higher the probability the stock should outperform a AAA corporate bond. What do you do with a bond? You buy it. After it matures, you get all of your money back with a little interest. So we're looking at that as the market from this perspective. And these stocks, all of them should outperform the market. Looking at AMPY should outperform the market or that AAA corporate bond by 40%. Safe bulkers, hot industry, should outperform that AAA corporate bond by 53%. ERF by 51%. How about EVC should outperform a AAA corporate bond over the next 1 to 3 years by 71%. And RRD, the last one, should outperform by 50%. So all of these stocks, by way of the VectorVest analysis, has the capability of not only outperforming the market, but doing so very nicely over the next 1 to 3 years. Next thing, I said we're going to give up some risk. Absolutely. I'm looking for stocks that are going to grow, but I'm willing to take a little risk to give these stocks more room as I own them. So all of the relative safeties, which are also cast on a scale between 0 and 2, for the most part are below 1, with the exception of EVC that does have a relative safety of 1.07. Relative safety is an indicator of risk, and it looks at the company's ability to perform financially. Now, the next indicator in the growth stock, these stocks are all moving up big time. Relative timing is our short-term price trend indicator. Above 1, the stock's in an uptrend. The higher above 1 it is, the faster in an uptrend it is. And look at Amplify. Woo-wee, streaming up there just like an airplane taking off. Holy smokes, it is way up there. And then we look at our master indicator, VST, which combines all three of these. All three indicators, they all have great VSTs on that scale between 0 and 2. Notice that they're all buy recommendations. Let's hone in on some more why I like these stocks. They all have positive earnings, and look at the double-digit earnings growth rate. So that's the why behind these stocks being great picks for growth stocks. Now, this is just 5, and we track over 9,000 stocks. This is just 5 that I picked out for you guys here on YouTube. If you want the ability to come and do this same analysis on your own and build a search like that I just showed you, 99-cent trial for 30 days, you have access to do this. All right, so now let's go look at the graphs on all of these. Move my graphs over. You know me, I like a 3-month graph. From a longer-term perspective as a growth prospect, I'm going to look at the 20-day exponential moving average. I want to look at volume and make sure that, look at that. That's just a beautiful looking equity curve. I'll look at the earnings per share and the earnings growth rate, the engine that drives the stock's price higher. Now the question will come in, can I buy it now? Absolutely. Just make sure you buy on an up day and make sure that the market overall is in an uptrend before you pull the trigger. These stocks, even though they're great growth stocks, because of that safety value is going to be a little lower, they will be susceptible to big pullbacks. But look at this 3-month graph. Instead of pulling back, it sat in a little bit of consolidation for a little bit, but volume's really picking up on it. I'd look at getting in about 5 cents higher than the high. Next one, safe bulkers, hot industry. Transportation ship is a hot industry, and this stock has been growing like nobody's business. New high today on a 3-month graph. Earnings growth rate look great. Wow. Next one, ERF, petroleum, another hot industry right now. A little bit of indecision going on into the current market right now, but above the 20-day exponential moving average, and look at the most recent days, above average volume. There is conviction behind the movement in this stock. Look at the earnings growth and the earnings per share, nicely rising higher. Now, EVC, look at that. Look at that trend line. Now, remember, this is a great representation right now of giving up a little bit of safety. This stock is a little bit more volatile, but overall moving up higher. A growth stock needs to be willing to give up on a little bit of safety to take advantage of the move to the higher side. Nicely above the 20-day exponential moving average today. Would love to see it break through that level of resistance, and then altogether the 3-month high. Can you buy it today? Absolutely. But notice that by way of the graph, the stock is more susceptible to some volatility. And then the last stock, RRD, pulled back like the bounce off of support, now above the 20-day exponential moving average, and moving up with alacrity with the volume picking up as well. Earnings per share, earnings growth rate, both moving higher. Folks, these are 5 stocks that you need to keep in mind from a growth perspective. And very simply, I was able to hone into them by utilizing the VectorVest system in order to find these stocks. So this is, again, another part of our how-to series. We're going to keep it going. I've got a lot of videos planned for the how-to series. Hopefully you like them. Until the next time, folks, this video is over. See ya.